Ray Kroc, the founder of McDonald's, J.C. Penney, the founder of the retail store, J.C. Penney, Walt Disney. These are three prominent folks that ultimately use their cash value from their life insurance as a funding mechanism for their business. We're going to talk about all three. So Ray Kroc, in the beginning, of course, if you're a business owner, entrepreneur, you experience this, where it's a little bit more difficult to get funding through traditional banks. Ray Kroc, ultimately, in the beginning stages when he was trying to grow the company, he actually used the cash value from his life insurance policy to finance the growth of the business. Now, you don't necessarily have to do a loan against the policy. You could do a withdrawal. But sometimes doing a loan may be more beneficial than taking a withdrawal. And of course, the structure of the policy has to make sense. So having that conversation in the beginning as to overall what's the goal that you have could help in the actual structure of the policy. Now, J.C. Penney, of course, they use the cash value through borrowing, right? So they borrowed against the cash value that's in their life insurance policy to fund payroll during the Great Depression when the company was struggling. So fund payroll and for operating expenses. And then Walt Disney, they used their cash value when they were looking at Disneyland. When they're actually creating Disneyland, again, conventional bank loans are a little bit more difficult. It was a little difficult for them at the time, and therefore using the cash value from their life insurance made more sense. Like I said, maybe whole life may not necessarily be for you, but having the conversation as to what are your goals, it may make sense. Have the conversation just to try to determine what may make the most sense for you, whether it's term, could be whole life, and any variation of those different permanent policies. But you won't know unless you have that conversation. Like, subscribe. See you in the next one.